the users want accounting information. 1. The owners/shareholders use them to see if they are getting a satisfactory return on their investment, and to assess the financial health of their company/business. 2. The directors/managers use them for making both internal and external comparisons in their attempts to evaluate the performance. They may compare the financial analysis of their company with the industry figures in order to ascertain the company's strengths and weaknesses. Management is also concerned with ensuring that the money invested in the company/organization is generating an adequate return, and that the company/organization is able to pay its debts and remain solvent. 3. The creditors/lenders want to know if they are likely to get paid, and look particularly at liquidity, which is the ability of the company/organization to pay its debts as they become due. 4. The prospective investors use them to assess whether or not to invest their money in the company/organization. 5. The government and regulatory agencies such as Registrar of Companies, Custom Department, CIDA, etc. require information for the payment of various taxes such as value-added tax, VAT, income tax, customs and excise duties, for protecting the interests of investors, creditors, lenders, and also to satisfy the legal obligations imposed by the Companies Act 1956 and CB from time to time. Internal users of accounting information: officers, sales staff, owners, directors and managers, research and development managers, plant managers, production managers, marketing managers, HRM managers, purchasing managers, distribution managers, service managers, internal auditors, budget officers, controllers. External users of accounting information: lenders, shareholders, government, consumer groups, external auditors, customers, suppliers from the regulators, lawyers, directors, brokers, press, contributors, consultants, analysts, players, underwriters, planners, appraisers, market researchers, stock-and-trade researchers, dealers, wholesalers and distributors, accounting system designers, merger services officers, managers and experts, business operation personnel, researchers and experts, forensic accounting planners, external litigation support executives and managers, external and emerging new entrepreneurs, external strategists. Explain accounting as a source of information. Accounting is a definite processes of interlinked activities that begins with the identification of transactions and ends with the preparation of financial statements. Every step in the process of accounting generates information. Generation of information is not an end in itself. It is a means to facilitate the dissemination of information among different user groups. Such information enables the interested parties to take appropriate decisions. Therefore, dissemination of information is an essential function of accounting. To be useful, the accounting information should ensure to 1. Provide information for making economic decisions. 2. Serve the users who rely on financial statements as their principal source of information. 3. Provide information useful for predicting and evaluating the amount, timing and uncertainty of potential cash flows. 4. Provide information for judging management's ability to utilize resources effectively in meeting goals. 5. Provide factual and interpretative information by disclosing underlying assumptions on matters subject to interpretation, evaluation, prediction, or estimation. And 6. Provide information on activities affecting the society. The role of an accountant in generating accounting information is to observe, screen, and recognize events and transactions to measure and process them, and thereby compile reports comprising accounting information that are communicated to the users. These are then interpreted, decoded, and used by management and other user groups. It must be ensured that the information provided is relevant, adequate, and reliable for decision making. The apparently divergent needs of internal and external users of accounting information have resulted in the development of subdisciplines within the accounting discipline, namely financial accounting, cost accounting, and management accounting. Financial accounting assists keeping a systematic record of financial transactions, the preparation and presentation of financial reports in order to arrive at a measure of organizational success and financial soundness. It relates to the past period, serves the stewardship function, and is monetary in nature. It is primarily concerned with the provision of financial information to all stakeholders. Cost accounting assists in analyzing the expenditure for ascertaining the cost of various products manufactured or services provided by the firm and fixation of prices thereof. It also helps in controlling the costs and providing necessary costing information to management for decision making. Management accounting deals with the provision of necessary accounting information to people within the organization to enable them in decision making, planning, and controlling business operations. Management accounting draws the relevant information mainly from financial accounting and cost accounting, which helps the management in budgeting, assessing profitability, taking pricing decisions, capital expenditure decisions, and so on. Besides, it generates other information, quantitative and qualitative, financial and non-financial, which relates to the future and is relevant for decision making in the organization. Such information includes sales forecast, cash flows, purchase requirement, manpower needs, environmental data about effects on air, water, land, natural resources, flora, fauna, human health, social responsibilities, etc. As a result, the scope of accounting has become so vast that new areas like human resource accounting, social accounting, responsibility accounting have also gained prominence. Explain the branches of accounting. The economic development and technological improvements have resulted in an increase in the scale of operations and the advent of the company form of business organization. This has made the management function more and more complex and increased the importance of accounting information. This gave rise to special branches of accounting. These are briefly explained below. Financial accounting. The purpose of this branch of accounting is to keep a record of all financial transactions so that the profit earned or loss sustained by the business during an accounting period can be worked out. B. The financial position of the business as at the end of the accounting period can be ascertained. And C. The financial information required by the management and other interested parties can be provided. Cost accounting. The purpose of cost accounting is to analyze the expenditure so as to ascertain the cost of various products manufactured by the firm and fix the prices. It also helps in controlling the costs and providing necessary costing information to management for decision making. Management accounting. The purpose of management accounting is to assist the management in taking rational policy decisions and to evaluate the impact of its decisions and actions.